8 out of 10 industries registered growth. Manufacturing, mining, trade sectors were the primary positive contributors to the growth on the production side of the economy. They were followed by the agriculture, forestry and fishing sector, which saw a 2.5% rise during the period, mainly as a result of stronger activity in both horticulture and animal products. On the expenditure front, stronger household consumption and softer imports contributed to positive momentum. Experts say with inflation contained and weak growth, the Reserve Bank may have room to consider rate cuts in the coming months.
The 0.8% lift, however, is still 1% below 1%, and of course below the 3% as well needed to create jobs in South Africa. The strengthening occurred in the second quarter compared to the first quarter's 0.1% outcome. We do not believe that the GDP data is strong enough to cause any concern to the South African Reserve Bank from an inflation perspective. We continue to expect another interest rate cut this year of 25 basis points, but South Africa still needs to see significantly stronger economic growth than the 0.8% that came out in order to make a change to South Africa's very high levels of unemployment.
However, gross fixed capital formation decreased for a third consecutive quarter and net exports had a negative impact on the total GDP. Fixed investment declined by 1.4%, while exports and imports dropped by 3.1% and 2.1% respectively.
Investments have been depressed for quite some time. If you look right from about the third quarter of 2023, they've been growing in the negative. The only time they went in the positive was just 0.2%. I think it was in the third quarter of 2024. But otherwise, they've continued growing in the negative. And indeed, one of the things that you can readily see if you move around in the country, whether you're driving between Pretoria, Joburg, you go through Cape Town, Durban or in the entire Thekwini municipality, you don't see as much cranes in the construction as you would see in other countries like Ethiopia, in Addis Ababa or in Beijing.
Key factor in this data set is fixed investment, which unfortunately registered another quarter-on-quarter contraction. However, the private sector's fixed investment at least increased and therefore partly reversed the contraction from the first quarter, but it was still lower than a year earlier. This needs to improve dramatically for us to see sustainably stronger economic growth.
The contribution by the construction industry also fell during the second quarter by 0.3%. Decreases were reported for residential buildings and non-residential buildings.
Construction has done well. It's one of those where in the past, or rather last year, it did exceptionally well. It was coming from very low levels. We saw rapid rise in construction. It's obviously, it's not surprising that is definitely going to ease off from its very, very high levels. But still, the manner in which it is easing is showing that there's definitely limited building activity that's happening. I think the relief that's coming from lower interest rates, the construction business is not seeing that already. I think consumers are rather benefiting from that. We're not seeing as many new buildings and infrastructure being built. And that may be a reason also to sort of say perhaps confidence from a business perspective is not that strong. Infrastructure investment is currently quite weak. Maybe it's as a result of the environment from not only locally but globally. That's a question mark, but it definitely is sort of showing a good picture as to what the business sector is sort of saying. So construction is a very good way for us to see whether or not people are feeling confident. I think right now that's telling the story that confidence may not be as strong from a business side as we would want it to be.
Chief economist at Citadel, Martin Ackerman, says the second quarter GDP numbers signal cautious optimism and have shown that the economy can deliver short-term recoveries even against a difficult global backdrop. He cautions, though, that lasting growth requires unlocking fixed investment, addressing structural barriers, and ensuring reforms translate into tangible economic activity. Diabosito, SABC News, Johannesburg.